Welcome back to our special chat with the two men who are spearheading Narayana Healthcare. I have with me once again Dr. Devi Shetty, the chairman, and joining us now is the MD and CEO as well as the vice chairman, Dr. Raghuvamshi. Doctors, thank you very much, and very sorry to intrude on your time like this. But Dr. Raghuvamshi, now your stock is listed and you are not bound by the capital markets regulator from making any forward-looking statements. You know, the nature of the beast, the stock market, is to ask for numbers, which is why I'm asking you, what kind of a revenue growth are you looking at over the next 2 years, 3 years, 5 years, the top line?
Yeah, last few years you would have seen that we have been growing in mid-20s to high 20s as far as our revenue growth is concerned. In last 3 years we have commissioned 14 new facilities, and we expect these facilities to become matured over the next 2 to 3 years. As a hospital becomes 5 years old, it is matured. So I expect the growth to remain in high 20s over the next few years as well.
Okay. Dr. Shetty, I understand a couple of hospitals are already underway, one in Vaishno Devi, one in Lucknow. How many of them get commissioned in 2016? Both these?
I'm not exactly, Raghu.
The Vaishno Devi hospital should get commissioned within this year. The hospital is at the moment scheduled to get completed by April, and we expect to commence operations latest by May or June within this year. As far as the Mumbai Children's Hospital is concerned, that is, the civil construction is likely to be over by end of this year, and we expect it to commission either in early 2017 or late 2016 calendar year.
Okay. So in the fiscal year you will have 2 more hospitals.
We should have both these hospitals starting. Yes.
Okay. Dr. Shetty, didn't it occur to you that since anyway some investors are moving out with you tapping the stock market, that you could have taken a little money for the hospital as well? In this current stock market foray, you've not taken tapped for money for the hospital.
My colleagues told me that we don't need money right now for the growth, so they thought it was not required.
Okay. Yeah. Your colleagues also told me that you need about 100 crore purely for maintenance, upgradation, wear and tear. That would have been welcome money, even that much. I mean, it will mean a little
I think we
easier.
need to be efficient and manage our operations well. It's very easy to raise money,
okay,
but our success so far has been always we tell ourselves we don't have that kind of money. Now, how do you reach where you want to reach without huge lot of money? Because money is expensive.
So you always had an eye on using space, capital, equipment, people very efficiently.
I don't think today in healthcare, no country in the world can afford to splurge. So we need to be prudent. We need to see how best we can use whatever resources we have.
Okay.
Yeah.
What is the capacity that is in use normally, your bed capacity? Is it, does it run 60%, 70% normally?
Yeah, the matured facilities typically would be having a occupancy of more than 65%, and the newer facilities, they gradually ramp up. On an aggregate basis, we have currently about 55% occupancy, and we expect it to steadily increase towards 65%.
Is that the industry standard? Or
the matured hospital usually would be operating on a 75% plus capacity, which means that the hospital is fully occupied.
Okay. So you still have some headroom?
We do have a lot of headroom.
Okay. Dr. Shetty, would you see yourself using digitization in a big way to treat patients, you know, in great distances, in long distances, through video conferencing or any such fashion? Is that a path you are looking at?
See, 12 years ago, when there was no Skype and all these modalities of communication, we were using ISRO satellite.
Okay.
And we have treated close to 60,000 heart patients in remote locations. So today we are laying a very strong foundation on digital healthcare because we believe that within 5 years, smart software will make smarter diagnosis than doctors. And within 10 years, it will become legally mandatory for doctors to take a second opinion from the software before starting the treatment. So we have been working at it for last more than 5-7 years now, and we have developed a very robust system. So it's a matter of scaling up and adding new facilities. Yeah, that's going to make a big difference, because most patients with chronic illnesses like diabetes or the heart failure, they need not come to the hospital every day to see the doctors. They can see the doctors on his mobile phone. And
Yes.
that's going to be the reality.
At the moment, how much has your digitization scaled up? How many patients in digitized care in remote areas to face-to-face patients?
Right now it's extremely small, very, very small, insignificant. But once the structure and the foundation of digital health, hopefully in the near future we should be somewhere close to it. Yeah.
Okay. Dr. Raghuvanshi, actually I wanted to come to even margins. That's why I was asking about digitization. While at an EBITDA level your margins are probably 12% in the half year just gone by, will they likely remain that way, or do you think your margins would improve? Because some of your peers, and now you will be compared with them, work with slightly better margins, 14%.
Yeah, as I said, in the hospitals you have a maturity cycle, typically 3 to 5 years, and we having a large capacity in nascent hospitals, 14 hospitals commissioned in last 3 years, they would go towards a maturity cycle. So you can already see the trend that we are trending at the similar level as a comparable peers. But I would like to point out here is that if you look at only the matured facilities, we have an EBITDA of about 24% plus in the matured facilities, the 3 hospitals which are more greater than 5 years old.
Okay. How long does it take to break even?
It depends on the location and several other local factors. However, as a thumb rule, in about 24 to 36 months is when at the operative level the hospitals become positive, and they generally mature by 5 years.
Okay. Well, while the EBITDA margins are very good at 12% plus in some years, the net margins are much more under pressure because, as you just said, maintenance upgradation is expensive. Do you see even at the net level things improving? I mean, you have come down even at the net level from some 3% to probably 1.5% in the half year just gone by. Do things get better?
Absolutely. As the pressure from the newer centers goes away and they start getting into the maturity cycle, we expect this to turn around, and also with the newer facilities, are not that many beds are getting commissioned in this year. So that would balance it out over the next 6 months.
But it will also mean a lot of increase in debt, isn't it?
No, we are very well poised as far as that is concerned. And as you were asking Dr. Shetty earlier, the reason why we didn't raise any new funding in the company is because we are pretty comfortable over there, and we have a kind of a net block of 900 crores with a debt of only about 250.
Okay. So the net margins may go back to 3% in a year?
One would like to go see it go there. Yeah.
Okay, but those are the comfortable margins for you. Okay. Dr. Shetty, final word from you. How do you see yourself, say, 5 years down the line? How many hospitals do you think you will be managing?
As many as possible. Our desire is to be one of the largest healthcare providers in this part of the world, and we want to grow, but I can't tell you exactly how many we reach in 5 years. But we want to grow fairly rapidly, but at the same time we are very prudent and very cautious in terms of our financial ability to cope with this massive expansion.
Yeah. Well, intrinsically you are a very careful businessman, I can see that. Dr. Raghuvanshi, you would be more comfortable with a more solid forward-looking number, say 4-5 years down the line. 5 years, that's how governments also think, 5-year plans. What would your size be?
We would easily be double of what we are.
Okay. Well, would you therefore look to tap the general investor for funds sometime soon? At the moment, you'll have only sold off your private equity investor. Would you be looking for, say, a follow-on public issue a couple of years down the line?
It's too early to comment on that. As I said, we are well posed for our immediate plans and whatever expansion we are envisaging in the next few years. So I think it's too early to comment on that. But at the right time, yes, all the options will be open, because growth is imperative. It's absolutely essential. And we will keep evaluating our options as we go forward.
Thank you very much, Dr. Shetty. Thank you very much, Dr. Raghuvanshi. I'm really sorry for having intruded on your consulting time today, but it was a pleasure to know that I was not enthralled, or I was not entangled in any medical jargon. You are as comfortable with return on investment, with efficiency of capital and return on investments, as well as in audit committees and checks and balances. Pleasure speaking with both of you. Thank you very much.